DailyFX BYOA contest for week 21. It's trading week of August 14th, August 19th, 2011. Currency pair I'm looking at right now is the Euro USD. We're going to be taking a look at the Euro on 4-hour time frame, the daily, and the weekly chart. About a couple hours ago, we had GDP data released for the Eurozone as a whole, including Germany, and expectations were missed. Estimates were missed by a good deal, and that was quite disappointing, especially with the recent trend we're seeing in these GDP reports. So I did make a video on the Euro CAD and also the USD Canadian dollar, kind of arguing for a risk-on move, but I think it is time to start getting a little bit more serious about looking at a global recession and the possibility of it becoming a little bit more rampant as it picks up here. Obviously, Germany is a major component of the Eurozone, and when GDP figures come out today like they did, and they're quite disappointing, what you're going to see in the markets is risk-off behavior really take hold. So it's of no surprise to me that the Stoxx 500, including the futures for the American markets, all pointing to a lower open. Obviously, FTSE down about 1.5% right now. So what you're really seeing is the market kind of taking this as a negative way, and you're seeing the euro drop. Now, what I'm looking at it from a fundamental standpoint right now, because technically I'm not quite ready to enter into this position. Fundamentally, we really need to look at the trend that's been going on, right? The United States had to revise its previous GDP. Figures don't look too good for the quarter two. Obviously, France reported last week. It is 0% growth. Okay, Spain, Germany this week. Nothing's looking really good from that standpoint. Obviously, Japan's not doing so well. A major growth sector, which is Israel, actually, is showing a little bit of contraction as well. So what you're seeing is recession becoming a little bit more of a serious threat, especially when you see a big country, a big exporter, for example, like Germany, really miss expectations and estimates for their GDP. So going forward, this is obviously just a fundamental analysis of what's going on, but originally I was thinking this week could be a solid risk-on week, but after today, I'm really questioning that thought quite a bit here and really reconsidering what the euro might do this week. I don't think it's a stretch to say that we could hit this bottom level down here around 141.4 this week. I don't think that is out of the question. Certainly today, I'm almost certain today is going to be a risk-off day, and we need to continue to monitor the news and see what is coming out, what data is really going to show us what we can do in the market in terms of entering into positions. We do have some housing data that's going to come out. That's also a good indication of what is going on in the market. If housing is contracting, building permits are contracting, you can expect that risk-taking behavior is also going to be pulled back, and we're going to seek out more safer areas to put our money. So here's the euro on the 4-hour chart. As you see, we hit this resistance zone here around the 144.5 level, and we pulled back. That was consequently right around when the GDP data came out for Germany. I was expecting a little bigger of a drop, so I am kind of curious about this move right now, but we are kind of making our way back down. If you take a look at the daily chart, you can kind of see here, we are making lower and lower highs here. So I mean, you can start all the way back in May if you want. You got 1, 2, 3, 4, 5, essentially 5 lower tops here. So just if I could just kind of draw, I mean, here you can see we have 5 different lower tops here, and that is obviously not a good sign really for the bullish momentum going forward. Now, this is obviously a much longer term perspective, but you really need to look at the fundamentals and how the market's developing currently. From a weekly, obviously the weekly chart is still showing kind of a bullish run up, but we've wedged ourselves into this wedge formation here, where you can see probably the key resistance for us going forward is most likely going to be that 140 level, probably 140 even, because that's going to be breaking this swing high that we made here. So as you can see, this wedge formation is kind of showing us here that there is potential to break out of this to the downside, not necessarily to the upside. It really just depends on what the markets give us. If we're seeing good data, even data that's not great, but maybe data that's beating really bad estimates or expectations, that any sign to give us that is good for the markets, they're going to interpret that as a risk on move. But really, what the data that came out for Germany today was obviously not very good, and we really need to reconsider our sentiment for the market going forward. I'm currently not in this position yet. I am considering a short position. I did exit out of my Euro CAD a little earlier than I expected, just because I'm concerned a little bit about the risk-taking behavior in the market right now. But that's basically my analysis for the Euro USD. I am looking for potential sell signal. I'm not quite ready for one here at the 143.6 handle, but maybe if we get a retest of the 144.5 and a failed breakthrough, that would be my sell signal, and I would be targeting the 141.4 level, and probably no lower than there, because we are going to see significant resistance like we have for the last more than 2 weeks almost. Okay, so thank you for watching, and good luck trading this week.